Hey, what's up? So, guys, this is yours, Paratu. From today onwards, I want to share the all information that I got in my degree about accounting. So, let's go. Today, we are going to discuss about the gap principles and accounting concepts. What is gap principles? Gap principles are generally accepted accounting principles. Why this gap principle? These gap principles are to make uniformity to all the accounting standards in the world. So, if all the accounting standards are the same, so it is easy to compare the businesses and their profits and their financial position. It is a one thing. And another thing, if all the standards are the same, then you don't get any confusions while recording the transactions. So that's why gap principles are introduced. If you want to get more marks in the examination, you should learn in unorthodox way instead of orthodox way. This is the unorthodox way. Making mnemonic. It is a mnemonic to remember the accounting concept. Forgot about the U. I kept this for pronunciation. In Mamdraxi, the first M stands for money measurement concept. Money measurement concept. The name itself indicates that you should record the transactions which are related to monetary terms. It means you should not record the transaction which are not related to money. Right. So let me give an example. You are an accountant in a company. So you are recording all the monetary transactions. Suddenly your manager got died. Do you record my manager got died in your accounting books? No, right? We don't record any transaction which are not related to monetary things. Yeah. Yes, I removed the glasses because I'm looking like Panchapatta Sarangapani in Snehitulu movie. So let's move on to accounting period concept. Accounting period concept. Everything has a set of period and expiry date. We human beings set a period to achieve our own goals, right? The accounting book starts from April 1st to March 31st as per financial year. Or else as per calendar year, January 1st to December 31st. Opening and closing. So if you don't put any period, you can't compare the previous year profits and you don't predict the future to get more profits, right? If you know the previous year profits and previous year position, then you have a chance to make new strategies to boost up your profits in future. So accounting period concept deals with that. So let's talk about this matching concept. So the matching concept states that every journal entries, every ledger, every trial balance, every profit and loss, every balance sheet should tally. If it doesn't tally, it means you did a mistake. So the matching concept deals with that. Every account should tally. If it doesn't tally, it means we made a mistake. We accountants made a mistake or no, we accounting students made a mistake. Let's talk about dual aspect concept. Dual aspect concept states that every transaction has an opposite transaction. Dual aspect concept means if one item will be debited, another item will be credited. If you purchase some goods, then the transaction would be purchases account data to cash account. Dual aspect. Dual aspect concept means this. Yeah, every transaction there is an opposite transaction. Realization concept. Realization concept states that only record the transactions when the money got realized. Until don't record the transactions. So let's talk about going concern concept. Let me give you an example. If you want to put a business, you put a business for one day, no, right? You want to continue the business for some years to get the profits, right? It is the main aim and motto of the business. And let me give you another example. I have a bicycle, I sell for 5,000 rupees or something. Should I record the transaction? It is not a business, right? Only business related transaction should be recorded in the accounting books. Going concern concept talks about that. Simple. Business entity concept. Business entity concept states that business is separate and owner is separate. So let me give you an example. You have a fancy cosmetic store and also you have a wife looking like a guy. She keep on taking the cosmetics and nail polish from the business. How would you calculate the profits of the business and how would you calculate the financial position of the business? Did we put a business for ourselves? No, right? We put the business for the profits. And also we used to treat the capital as liability, not as an asset. Because of this separate entity concept. Mind it. And last but not the least, cost concept. Cost concept means record the actual value of the asset. So let me give you an example. I bought this marker in 2015 which cost 50 rupees. And this cost is 100 rupees now. So I should record only 50 rupees. Accounting concepts are not volatile as stock market. right? End of the video. So guys, if you like this kind of explanation, please hit the subscribe button and hit the bell icon, which is completely free of cost. So let's talk about accounting conventions in the next video.
Man. Oh my god.